Hi there, it's Bill with Smart Trades. It's Wednesday, July 27th, around 10:20 a.m. Pacific Time. Today I'd like to start off with a review of a report that I sent out to my smarttrades.com customers. If you'd like to get these reports in real time, please visit me at smarttrades.com and subscribe to my newsletter. Here is the actual chart that I favored and sent out to my customers about 10:54 a.m. In fact, actually I posted this chart earlier, but it was actually emailed at about 10:54 a.m. Pacific time, and as is most of this report, unless I've updated it. And at that time I was still mentioning that I favored the drop to about 1280, 1290. That gives us an A equals C pattern off the recent highs here around 1345. Also, I had mentioned this alternate count. I don't favor that count, and I didn't favor that count, but it's still possible. We're still above this low here at 1296, so it's not impossible that E ended at that time, and that will be off to new highs. One thing to note here, I think that it's pretty clear that however you count this pattern from February, that it's sideways, and sideways to me by nature is corrective. So the bigger message here longer term is that ultimately we should break out to the upside. You've got an impulsive rally up, and we could count this in a variety of ways. Obviously I've preferred to count it as a triangle, but no matter how you count it, we're basically going sideways again for the last 5 months, and to me that's indicative most likely of a corrective pattern in an ongoing uptrend. And again, back to this favorite count, we've got the triangle labeled here A, B, C, D, and E ideally targeting around 1285, but we shall see. Here's a little bit more detail on that count, and again the projection that I made yesterday. Note the very weak breadth ratios yesterday, and again here's that ABC count, and these target lines are just meant for purposes of giving you a general idea of the pattern. They're not meant as an exact target, and I actually prefer again about 1285 perhaps for the S&P if this does bear out. And here's how this is an update through just an hour ago or so on the S&P. This is a 130-minute chart. I like 130-minute charts of the cash as they show us 3 bars a day, and it gives us a little bit more of a wider view than the hourly and a little bit more detail than the daily. So a nice chart in my opinion to do analysis from. Anyway, what I said yesterday, let's back up to see where we were when I made this comment. I said I still favor a more bearish short-term pattern. I suspect Washington will accommodate New York and try to scare stocks out of the weak hands before taking the market higher. This allows for bad news, a panic down to 1280 to 1290, good news, and a bottom, and then we get our rally to new highs. And I said, however, beware, they may screw it up. A break of 1250 kills the pattern, as does a rally above 1360, and that relating to again this triangle pattern and the ideal target of 1285. Here's the Qs, and interesting to note, a little different pattern. We have again the possible flat here in the NASDAQ, A, B, C, and then an impulse wave up. It's possible this is a 5th wave. One of the things to note here on the breakout to new highs was that we had non-confirmations, in both momentum and volume. And to me that's a red flag. Moreover, when analyzing the 130-minute chart of the NASDAQ, I noted that we had a possible 5 waves up, and the 5th wave of that pattern was a wedge. Also of note here is that 1.62 times the wave 1 targets right around the 2435 area, and 62% of the 3rd wave extended from the wave 4 low targets around 2445, 2450. I split the difference and I targeted the area around 2440 as a target for the NASDAQ. And here's how it's panned out so far. The actual high in the Nasdaq was 2438.44, and obviously from there we've keeled over a bit. And again, note the very weak breadth divergence here, which was already showing quite well yesterday. And again, we have a breakdown of that wedge. Ideally in the Nasdaq, if indeed this is an impulse up, and if it's only wave 1 of 5 up, the target to the downside is going to be around 2320. We'll see how that pans out. Here's the Qs, and again, here's that wedge formation. Here's the failure after the breakout. You had kind of a consolidation at a new high, but on very weak volume. And we broke down both out of the larger wedge and a smaller wedge late yesterday on the smaller wedge, and today obviously on the gap down on the larger wedge. Bonds have been hanging in there. This is the TLT, the 20-year Treasury bond fund, and the move off of the highs, in spite of all the trouble in Washington, it looks kind of corrective. So we actually, and probably we need to get good news on this for it to happen, but it actually looks like they've got another pop to the upside coming, as long as they can hold the bottom of this pattern. But you know, again, this is kind of a volatile situation with the news and so on and so forth. And I do think the markets are being manipulated here to a large extent. The difference between my analysis and some others is that I think that manipulation can actually be read. You just have to watch the volume, price patterns, and so on and so forth. Obviously, you know, I can be wrong too, but you know, so far so good on this recent triangle. Gold is one that I've been wrong on. Gold has been stronger than I've anticipated, and I've looked at this as a possible A down, B back up, and then a C wave. I think that's still a possible scenario. However, gold has been, you know, relatively strong, and I did note yesterday that even though it's been stronger than I had anticipated, to watch out for this trend line. And indeed, we've hit that trend line, or just slightly through over it, and we have come down about almost $20 in gold off of that peak. Again, all of this is you know, with the backdrop of what's happening in Washington and the potential default and so on. So you know, if things really go south, gold could go north. But however, here again is silver, and my problem with the gold rally continuing at this point is it rarely does so without the company of silver. And you can see we are far off the highs in the silver market, and we're still hanging in there on this possible, you know, A, B, C, B, or 1, 2 to the downside in silver, and not even close to making a new high. Natural gas. This chart is from yesterday, and again, I noted in the previous report we had 5 waves down. We have a possible impulse to the upside and a corrective looking decline. So potential exists if we can hold these recent lows in natural gas that we may move higher. Here's the United States Natural Gas Fund. If you're not trading the futures market, this is probably a market to look at instead. And again, the impulsive nature of this rally, the corrective nature of the decline, as long as we hold above 1040 or so. I think 1026 is the actual low. You know, this is a possible bottoming formation, impulse up, corrective down. That bodes for another impulse to the upside, even if it's a correction. Crude oil. Crude oil, I think, actually can move a bit higher. I do think, however, this rally is corrective. I don't think it's going to take off to the upside. I called for a bottom down here around 90. From there, I think we have a relatively impulsive A up, probably a triangle B wave, which, if it is indeed a triangle, helps confirm the probability that this rally is corrective. So that would count best as A, triangle B, and that we're working on C now. We're actually down a bit today, but we're still holding the bottom of this B wave here, or the apex of B, I should say. So if we do continue to hold, this scenario may play out. But again, not a huge rally ahead for crude, but it could have some higher prices, may even go up and test the top of this channel. And finally, the euro. This is, again, a chart from yesterday, 480-minute on the overnight market. Sometimes I use the 240 or the 480-minute charts to get a little more detail than the daily. And I counted at that time a possible impulse up and noted 145, 147 as the target area or resistance area. And you can see we had a peak here. And today, I believe we got to about 145.15 or so. And from there, the euro has moved lower. Again, the fact that we have an impulse up probably indicates that we should have a correction down and then higher prices in the euro longer term. However, this fits rather well with the scenario with the triangle and the possible S&P test of the 1285 area, more or less. Anyway, that's about it for now. Again, if you want these updates in real time, please visit smarttrades.com. If you like the video, hit the like button here on YouTube. And thank you so much for watching. Hope you're having a great week. Bye-bye.